Good morning, ladies and gentlemen, and welcome back to the show. Today it's going to be a bit of a different show about a subject which I am very much into, and it's no secret that I'm a big fan of Bitcoin and cryptocurrencies, blockchain, DeFi, the whole shebang, which is basically the future, which is already here. Extremely exciting and interesting times we're living in with all these technological revelations. And today, I'm very happy to be interviewing a charming lady called Yael Tamar. She's the CMO and co-founder of a company called Solid Block. We're going to have a conversation about Bitcoin, crypto, blockchain, tokenization, regulations, the economy of the future, and much more. So without further ado, welcome the one and only Yael Tamar. Hello there, good morning. How are you today?
Amazing. Good morning, Michael. Thanks for having me on the show. How are
Brilliant.
you?
I'm amazing, thank you. Whenever we speak about Bitcoin and friends, I absolutely light up and I'm happy and amazingly interested in all this stuff. So before we start, perhaps you could give us a bit of a background about you.
Sure. So I am a finance person, first and foremost. I have an MA in economics from City University of New York. Right after school, I started working on Wall Street as an analyst for a broker-dealer, where we did a few cool things, among them applying for new approvals from the SEC for a new asset class, which kind of, introduced me to the world of regulation and ability to build something new, right? Something surprising, I guess, in the finance world. And then I learned how asset classes get invented. Every decade has its own asset class that kind of redefines the whole financial industry and introduces the public to a new way to make money. Right. So from there, I went into private equity and M&A here in Israel, where I live today, working with some large companies here in Israel and globally, and finally brought me to financial engineering, which I did for about a decade, putting together different funds of funds, different asset classes, again, to sell to mainly wealthy individuals, right, high net worth individuals. So all in all, that was my career until I learned about startups and fintech. So that was my passion for a while, and that brought me to blockchain. About 4 years ago, and I fell in love with technology that will definitely and has redefined many things that we're doing, although behind the scenes, right, with financial institutions and things that we don't see day to day necessarily when we go to a shop and pay for something, and what's happening behind the scenes, how money gets transferred from one place to the other, right? So, I fell in love with Bitcoin and crypto and all of these things. So that's how I came to Solid Block.
I see. So before we talk about Solid Block, let's just take a step back and talk about Bitcoin. What can you say about this amazing invention called Bitcoin? Why do you love it so much? What's so special about it? Why is it going to change the future of humanity?
Bitcoin is super innovative. For many, many years and decades, people have tried to send assets one to another in a disintermediated manner. And it wasn't possible because, just because of what's called like a double accounting, right? So if I want to send you money, if there's nobody there to approve the transaction and take the money off my balance and add it to your balance, right? How can the system overall understand and learn that my balance has reduced and your balance has increased, right? Nobody has figured it out until this group of individuals, or an individual named by Satoshi Nakamoto, who just, created this blockchain mechanism that allowed people to send money and other assets one to the other, with a whole system and network of computers globally approving of the transaction, which is absolutely brilliant, right? So that happened around 2010, 2009, 2010. And then we realized a few years later that blockchain can be used for many other things and simplify the world that is full of intermediaries, simplify and make transactions much cheaper and faster and more efficient. So I fell in love with it from the efficiency point of view, which is one of my things. In general, digital transformation and advising companies on how to implement blockchain, how to implement other technologies. So I fell in love with blockchain, and Bitcoin is just kind of like a side effect that is amazing, because it kind of introduces the world to DeFi, decentralized finance. The reason why the government has not prohibited Bitcoin, has not, made it illegal, is because it can't. There's no one entity out there that is enabling Bitcoin that you can shut down. It's not something you can shut down. And if not something, and the government understands, global governments, they understand they cannot shut it down. So they created a bunch of regulation around it in terms of, where you meet this regulation is when you withdraw Bitcoin and exchange it into fiat, exchange it into other currencies that banks can control. So as an experiment, Bitcoin has been tremendous for us to understand how we can actually take back the finance, which now belongs to big governments and banks and big institutions. And so it made institutions transform completely, right? So they're now using blockchain and adopting crypto and adopting to this new reality. So, it's kind of, we're taking back control from the government with Bitcoin.
Amazing. Absolutely. And just one last word about Bitcoin, about it being, it's true that it's very slow and it's kind of the oldest technology in the crypto sphere around, because it's like the Elvis of crypto.
Yeah.
So it's more like digital gold rather than a means of payment. You won't buy chewing gum, in a corner store using Bitcoin ever. However, it doesn't mean it has no value. On the contrary, it has a lot of value because it acts as what?
Yeah. So the definition of money in general is that it can be used as a means of payment. It's used to accumulate value, right? And a unit of account. So those are the three things. Now, yes, you won't use Bitcoin to buy chewing gum. It's slightly expensive to use it, and maybe it is a little slow. On the other hand, you probably don't need Bitcoin to buy chewing gum in the corner store, but you can buy real estate. You can buy, make big transactions and buy things with Bitcoin. In fact, my theory around the recent dip in the Bitcoin price around the Black Friday is that a lot of people, Bitcoin went up tremendously. So people, to just exchange it to fiat or bought stuff with Bitcoin around the Black Friday, stuff on a discount, which I don't think anybody talks about. But I think that's what happened. And we saw some dip of around 10% on Black Fridays, because there are websites that accept Bitcoin, from gambling and, like I said, real estate and so on. So in fact, it's funny that it is very old, in our 10 years, it's a lot of time for technologies. So, but it does remain one of the most efficient technologies out there in protocols as well. So a lot of smart contracts are running on Bitcoin. There are many improvements being made, so I think that Bitcoin definitely is here to stay.
Okay.
And there's nobody out there that can, bid, just because of this decentralized nature. There's no other currency that can come out and be as strong as Bitcoin at this time.
I think it's important to mention that it is the most decentralized currency purely because it's been around the longest. So it's managed to conquer a huge chunk of the world, and nobody can overtake it because nobody has actually been there while it was the only player in the game for like 6-7 years.
Yeah, absolutely.
Good. All right.
Well,
so that's
10.
Yep.
11, yeah. Rather, yeah.
11 years. Well, that's enough for Bitcoin, the godfather of crypto. And may I ask, why did you found Solid Block? What made you do that?
So I was in the blockchain space for a few years, advising governments and companies on, this blockchain transformation. and banks as well. And it was time for me to start a new startup. And I've always been passionate about real estate and real estate investing, as an amateur investor, so single family properties and so on. I wanted to step up my game. And I realized quickly that it's very difficult to get into the space of investing because your money is stuck for many years in one project, right? And for some reason, this asset class is not like the others. It's highly illiquid, even though there are mechanisms for you to trade. So I realized blockchain can solve it very easily. So I created a company and I started looking at competitors. And I found Solid Block, which just finished the first project, which was called the Aspen Coin for St. Regis Aspen ski resort. And I saw the founder's name was Yuval, and I figured he's Jewish or Israeli. So I started looking for him, and it appeared he was here in Israel, a few hours away from me. So we met up and we joined forces. So I joined Solid Block, which Yuval has founded a few months before, and did a successful project. And so we've been working ever since, doing great, amazing things.
Okay, we're gonna get into those things in a moment. But how about if you could just share with us your passion? I mean, why are you passionate about blockchain in particular?
Blockchain in particular, I fell in love with about 4 or 5 years ago because to me, working in the financial industry and seeing how things operate and seeing high net worth individuals are mainly getting most of the benefit, right? So I wanted to democratize the space and I wanted to become an investor myself. And I saw how difficult it is how difficult it is to get started. And blockchain can solve all of these things, right? People can make a lot of money with blockchain, apply it to different industries, transform entire industries. So for me, blockchain, I don't necessarily equate it with, let's say, the internet or the transformation the internet has made, because a lot of the internet is B2C, and that's what you can see. You can see the sea with your eyes, right? With blockchain, most of this transformation is behind the scenes. So even though all of the banks out there are using blockchain right now for interbank transactions, you don't see it because all you have is a plastic credit card, right, that you see, or your Apple Pay or Google Pay or whatever, because these are just things in the front end. But what happens in the back end is something else. Another thing is, you can be your own bank. That's what I think it's all about. Be your own bank. That's what Solid Block is about as well. Be your own bank, be your own, real estate asset management company for all you want, right?
Hallelujah. So before we continue, ladies and gentlemen, our dear fans watching this, please subscribe to the channel, click like, share, because it helps with the algorithm to get this information to many more people around the world. So thank you very much for doing that. And back to you, Yael Tamar. How about the tokenization? Somebody said that everything should be tokenized. So let's understand what exactly is tokenization of anything.
I don't know if everything should be tokenized. It can be. So we'll talk about it in a minute. But tokenization is essentially two things. So it's securitization, meaning in a very traditional sense, plain vanilla security issuance. So we issue securities so that people can buy things easily, right? If you have a building in front of, in the back of me, you have buildings, right? Can you buy that building? No, not unless it's a security, not unless it issued a security for you to buy.
What's a security? So perhaps you could explain that first.
Security is just a piece of paper or, electronic file that shows that you own a piece of a company that owns an asset. So Burj Khalifa in the back of right here is the tallest building in Dubai, not for long because they're building a new one. If a company, if I want to sell a part of Burj Khalifa to you, Michael, I'm going to create an SPV, a special purpose vehicle, a company that will own all of Burj Khalifa or a part of Burj Khalifa, maybe a floor or whatever, right? Maybe 1% of Burj Khalifa. And then I'm going to sell you a part of that company. I'm going to sell you shares from that company, or I could also issue debt security, meaning I could say this SPV is going to borrow $10,000 from Michael, is going to give him 10% interest annually, right, for 5 years, and at the end of 5 years, you're going to get your $10,000 back. So that's a debt security.
Are you saying
or I could sell you an equity security and yeah.
Is just sorry to interrupt, but shares, just normal shares in a limited company, are securities?
Yeah. Yes,
okay.
Absolutely.
Well, that's clear.
Absolutely,
then.
they are. What makes it special for assets is that, you know, company is easy. If you want to invest in Solid Block, you know, be a part of our seed round, it's easy. You're going to transfer some money in the bank. We're going to give you or crypto, right? And we're going to give you a certificate that you own a part of Solid Block, right? So with companies, it's easy. With assets, it's not so easy because, you know, with assets, you have titles, you have complexities, you have taxes, you have a lot of things, and you cannot buy assets in parts, right? Companies, it's easy because companies set up in a way that you have equity that's already, you know, split up in percentages.
Yep.
With assets, you cannot easily buy a part of an asset. You go and you buy an apartment, or you go and you buy a building. If you want to buy a part of the building, that has to be a part of a company that owns that building, right? So that's a security. That's a security. There's a difference between buying securities and buying assets, right? So,
Tokenization.
So there you go. That's so one thing is securitization, right? The second thing with tokenization is that when you buy a piece of that company, instead of just getting a paper certificate or instead of your name being written in a database somewhere in some law firm, we're going to actually record your ownership on the blockchain, which is a highly secure process. You know, you can actually, number one, you can see it for yourself, you know, in the system, and not trust anybody to hold that cap table for you. Number two, you can trade, right? So blockchain enables us to trade in disintermediated way, right? So you can trade, you can sell these investments to your colleagues and friends and family or people you don't know through over-the-counter mechanism on exchanges. So that's the beauty of it, right? That's something that doesn't exist in real estate right now beyond a few public REITs. So, and not a lot of companies can go and be a part of, you know, and form a REIT. It's expensive. So it's not accessible to everybody. But with this, with tokenization, imagine a lot of scenarios where you can sell things in fractions, which is a part of it, but it's not a major part of it. The major part of it is trading. Now, the only caveat I have to mention is that when you trade, because this is a security, there's a lot of compliance and regulation around it. So the way to facilitate compliance and regulation, before somebody can buy a security from you, they have to go through what's called KYC, know your customer, AML, and anti-money laundering, and sometimes accreditation check, meaning that they are an accredited investor, because in some jurisdictions, there is a limitation of that. So, you know, it's usually done pretty painlessly. It's very similar to you signing up for interactive brokers, for example, right? Interactive broker online where you trade stocks. So same thing here. So it's a highly regulated and compliant process for you selling securities. It's highly secure because of blockchain, and it's very convenient. And you can think about real estate, how huge it is right now. There's 300 trillion worth of real estate around the world. Only 1% of that is tradable. So only 3 trillion real estate is trading. Yeah. So imagine the potential, the remaining 99.
Of course. So about tokenization once more. So let's say we take something, we take a building, or we take the Mona Lisa. I heard many people speak about the the painting, the Mona Lisa. So imagine that we are now going to tokenize that. So am I right by saying that we're going to divide the picture into little squares? Okay, let's say it's going to be 1,000 little squares, like pixels, and each pixel is going to have its own unique reference or whatever, and perhaps you're going to
with a picture you would create an SPV. Again, they will buy the picture from the Louvre, right? You'll buy the painting from the Louvre, and then that company you're going to buy, but it's not going to be associated with a specific part of Mona Lisa. It's just, why would anybody do this? There's two reasons. One, because they believe that Mona Lisa is going to go up in value, so they can actually, go around and trade, right? They're going to expect for it to go up in value in the future, which is a reasonable expectation, right? There's only one Mona Lisa in the world, right? So, so that's the reason number one. And the reason number two is some sort of a sentimental value or coolness factor associated with it. Like, would you buy, I don't know, Brad Pitt's house, right? So, you know, something to talk about on Saturday night. So I'm assuming most people would buy the Mona Lisa because it's going to go up in value. So you want to invest like $10, maybe tomorrow it's going to be 11, you can sell it.
So, but the point is, I'm trying to understand, how do you physically set up the tokenization? So are we going to create a token called Mona Lisa coin, which is an ERC20 running on Ethereum, for example?
We can do an ERC20, we can do anything, right? So the infrastructure is not important, but as long as it's, of course, you know, official and used by many. So ERC20 is the most common infrastructure. So we're going to create a company that will buy Mona Lisa. We're going to create an ERC20 token that mentions that company, right? And that security that we're issuing. We'll issue a plain vanilla security in some jurisdictions where you want to sell. In the US, you can issue a security by either, you know, if you just want to sell it to high net worth, rich people, aka rich people, you don't even have to get an approval from the SEC. You notify the SEC. And in Europe, you have similar procedures. The minute you want to sell it to retail investors, you have to use regulation CF, crowdfunding. And so you set up the compliance in different countries. It's complicated, but it's something that we have expertise in. And then you start selling the security through some sort of a platform that can verify, like I said, the KYC, AML, and sometimes accreditation. So these people, when they go into the platform, they want to buy the Mona Lisa. They have an extra $1,000 to put in. They go through all the compliance, and then they wire the money, or they, you know, transfer it in Bitcoin or check or whatever they want, and then they get the smart contract. So actually, through the smart contract, their name is written, or rather, you know, they're basically some sort of an identifier is written into the blockchain, where it says that Michael has invested has bought, let's say, 1,000 coins, where each coin is worth $1. Now, right? 1,000 coins.
Sorry, is it possible to buy the nose of the Mona Lisa or her ear?
No.
Or that's impossible. It's 10% is 10% of the whole thing.
Exactly.
I see.
And they're going to get one. Probably the Mona Lisa is worth around, I don't know, maybe a few $1 billion, right? So you're going to own just basically like very little of Mona Lisa if you invest 1,000.
I see. Okie dokie. So that's that. We now understand what tokenization is, and just like we've tokenized the Mona Lisa, we can tokenize buildings. We can public, I don't know, a land. I guess you could tokenize a piece of land and set it. So this way,
people tokenize luxury cars, like things that appreciate. It makes sense to tokenize only things that appreciate, right? So people tokenize luxury cars, motorcycles, paintings, any collectible items, real estate. You can even tokenize personalities, right? So people have tried to tokenize basketball players, right? Banking on their value going up. So that's...
I heard of something called NFL or NFT, where they tokenize characters within a computer game. It's huge now in the crypto world.
NFT, non-fungible token, I think they're doing. Yeah, you can tokenize characters. Also go, like, if you have some sort of a mechanism where things are going up in value, then it makes sense to tokenize. Tokenize, like I said, is just issuing a security. Why do people buy securities? Because they want to make money. They want to sell them at some point, right?
So what's the difference between a cryptocurrency and a security?
A cryptocurrency, as I mentioned earlier, has basically two main attributes. It's it's medium of exchange, and it's also, I guess, it's a store of value, right? In some ways, for cryptocurrency. But there's cryptocurrencies that are not classified as securities, like blockchain, like Bitcoin. Sorry, because there's nothing behind it. It doesn't represent any other assets. Inherently, it itself is an asset. A security is a representation of an asset, right? Because you cannot buy an asset. You can't buy a Mona Lisa because it's so expensive. You can't buy Burj Khalifa because you can't afford it. So you're buying a security that represents a part of the asset.
Okay, I see. And that's the difference between a actual cryptocurrency and a security. Okay,
Yeah.
I guess I could buy a security with cryptocurrency, but I can't buy cryptocurrency with a security.
Absolutely. Cryptocurrency is inherently very similar to money, right? It's liquid. You can use it to buy stuff, and you can use it to store value. Now, in some cases, in some places, especially tax authorities, they argue that it's an asset. And they're not wrong. At the moment, Bitcoin definitely is an asset, and that's why they charge you capital gains tax when you sell it, right? So, and they're not wrong. And in any case, they're only charging you about 25%, right? So
Only
10 to 25, yeah, capital gains tax, wherever, depending on your country where you live. So, you should, I guess some of us should be grateful, right? And in any case, making a lot of money with Bitcoin, only spending a little bit. But, people are all up in arms about it because, of course, the government shouldn't be up in everybody's business. So there are ways that people are actually, channeling Bitcoin to buy different things, right?
Yeah.
So it's a complicated and philosophical argument, I guess.
Yeah, well, I think it's money. I think it's a currency. I do not believe it's a security. It has all the attributes money does, but as in the government, the rulers, they're not going to give up on the capital gains tax. That's why they're going to call it a security, although it's not.
An asset.
An asset. Yes, and just to explain to the viewers, if it's not an asset, if it's a currency like dollar, shekel, euro, etc., then there's no capital gains. Meaning, if you now have $100 bill in your drawer, and you live in Israel, and that's worth, let's say, 300 shekels. But if tomorrow it's worth 350 shekels because the dollar goes up, then the extra 50 is not taxable. You don't need to pay anything because it's a currency. Now, with Bitcoin, they don't want to call it a currency because it goes up so much. There's a lot of money to be made by the government. So although it is a currency, they're calling it an asset, which it's not. I think in Japan, it's already recognized as a currency.
Currency? Maybe.
I think I heard something. But anyway, moving on to solid block. So what exactly is solid block now that we know all this information about the industry?
Sure. So we're transforming illiquid assets like real estate into tradable securities on the blockchain, right? So we're going to sell you shares or, securities, I guess, digital securities in beautiful buildings like the ones behind me. These are AAA, buildings that are not, or projects that are not accessible to public. Even sophisticated investors usually cannot get in on these projects. So you'll be able to diversify your real estate portfolio instead of, let's say, owning one apartment, as a lot of people have seen through this pandemic, especially those that invested in vacation homes that they were renting out with Airbnb, are now seeing the impact of this pandemic, right? So you definitely should diversify your asset classes, right? Invest in different types of asset classes and different geographies and so on, just like you do with any other assets, right? You don't put all your money in one stock. So, although a lot of Bitcoin maximalists keep 95% of their assets in Bitcoin, which I don't, but
why not?
Why not? I come from a financial background. Risk diversification is basically, and a lot of these Bitcoin maximalists are in their 20s, no longer living in their mom's basement because they have a lot of money. They made a lot of money with Bitcoin, but us professional parents and family people have to diversify.
Okay.
And so that's solid block. So we've done the St. Regis project. We're issuing a few new coins around the world, and definitely expanding our horizons, so to speak.
So you are the ones who pick the buildings to tokenize. So And then what, you would approach the owners of the building and say, well, let's tokenize your building. And they'll say, well, why should we agree to that? We don't want to tokenize our building. Well, you have to say, well, you should, because you're going to make more money. Or what's your sales pitch?
Yeah. Well, usually actually they come to us because they heard about St. Regis or in general, they heard about tokenization. But what we usually tell them is you build this amazing building or you're building this amazing project. How are you going to make money right now and not in 7 years when you sell it? Why don't we sell it right now to eager investors that want to participate with you because they know you're amazing. They know you've built Burj Khalifa, so now you're building a new one and it's going to be as successful. So there are people who want to come with you. So why don't we tokenize right now, or leverage what you've already built and sell it to investors? And you can have your partial exit, and now you can go and build more, right? So it enables you to build more and faster. And that's what we tell to the owners, right, of the real estate. And to the investors of the real estate, it's very easy. You've seen this amazing building behind me. The owner is building a new one, and with incredible architecture, I'm sure it has a high probability of success. So, and this owner has a track record that shows it to be successful. So put your money with this one, on top of putting your money in with others, so you can diversify. Put a little bit of money in this one, and then, you don't have to wait. Also, you don't have to wait 7 years or a decade until somebody comes and buys it, right? Like, for example, somebody just recently bought an Empire State Building in New York, right? But that took a few decades to materialize. So you can actually trade with other people, right? So you can sell it on an exchange and make some money.
I see. So if we're now, for example, in Israel, and let's say you were to tokenize the Azrieli round building, so you would create an Azrieli coin, and I could buy $1,000 worth. And it's already listed on on Binance as a normal token, which a week later I can go and sell for a profit, provided the demand is higher and the price goes up.
Yes. Well, it works like that approximately, right? For some reason, right now, Binance has not entered the security token space, but it does have all the licenses to do so. So I'm hoping that it will. I think they're waiting for the right moment. There are other exchanges where you can buy and sell these coins. And also there are a few additional limitations for Americans. For example, if somebody's here who is from the US, when American citizens buy security, with most regulation that, let's say, allows high net worth individuals to buy securities, you cannot sell it for a year. And then there's a lockup of a year and then they can sell.
I see.
So that's done to prevent, to protect retail investors, because in the secondary stage, retail investors could start buying. So I know it's complex, but just to understand that it's, the security space has different limitations.
Yes, indeed. So just before we continue, I'd like to ask our viewers once again to subscribe to the channel, share the video, like it. It helps a lot with the algorithm. Thank you very much. And back to you, Yael Tamar. How about small-time property developers? Surely they deserve to have solid block service. I mean, I have a friend, he's a property developer in America. He has buildings worth anything from $50,000 to $800,000. So is he not the kind of person who can use your amazing platform?
Eventually he can. Right now, because regulation is fairly expensive, it may not be economical for him to do this, because we have to write a mini prospectus for him and do some regulatory work. So we start projects at $5 million and up. We want to make sure that it's economical and beneficial for them, right? So we want to work with clients that are that will be satisfied at the end of the day. However, I think the regulation is changing and becoming more forthcoming for blockchain. And also, as we grow, because we're a startup at the end of the day, right? As we grow, we'll be able to create templates and just make services cheaper as well. So we'll be able to also help your friend.
So how do you make your money?
I was thinking about some joke, but I'm just going to say it. Very simple. We're taking trading fees from the trading via broker dealers that we work with. We have transaction fee for issuance. Like issuance is basically when you issue the token, and we take transaction fee like PayPal or Venmo would, right, when money passes through our system. We have some onboarding fees, like I said, to set everything up. And finally, we also enter into partnerships with the real estate companies where we're basically also receiving funds from the percentage of the upside in the project.
Uh-huh.
That actually has us, put our skin in the game and be able to show, that we believe in the project. So we do very thorough due diligence, both legal and business, on every project we do.
Okay, so let's just whiz through the questions I have here, because we might have touched upon many of them. What is an issuance platform?
So issuance platform is exactly that. We issue securities on the blockchain, right? So number one, these are all regulatory processes that go behind the scenes when on board the project to issue a security in the traditional sense. And number two is recording this ownership on the blockchain. So our platform looks like a regular real estate marketplace where you go and buy. Usually don't sell, right? So it's a one-sided marketplace. The owner sells you some asset, right? There are some crowdfunding platforms where you can go and you can invest in an asset. But with our platform, you can actually go and list it for sale. You list your securities for sale.
I see.
So that's the issuance.
Okay. So thank you for that. What does democratize access to real estate mean?
It means that you as an investor have access to properties around the world, right? You can buy, you can sell, you can buy and sell at any time. Not only in the beginning where the risks are very high, but in the middle and in the end, right? So as the risks lower, they obviously your upside is reduced, but you may have a different risk appetite than somebody else.
So where's the democracy?
Oh, okay. Well, democracy is basically, when you talk about democracy in traditional sense, is your access to governance, right? But, we don't have a better word for real estate. So democratizing just means, creating access for everybody.
I see. Making it like fair. Okay.
Yeah.
Now, why do you think that blockchain and real estate have good synergy?
I have fantastic synergy, in my opinion, because real estate is the most illiquid asset out there. Yet it's the asset class that is so protected by the government, that it makes sense to have it. It makes sense to own it. It's very stable. It's it's only growing all in all, right? So because obviously there's more and more people around the world that need to live somewhere. So the residential asset class is growing. Offices, probably are not growing as high right now, are actually not doing so well, but, there's still a place for this asset class. Commercial is always there, right? People love to go shopping, and there's also logistics, and the real estate is just a basic asset class that makes sense for us to have. And people should have access to the most basic asset class. And blockchain allows us to democratize real estate and to increase the trading. Like I mentioned, only 1% is tradable right now. So there's a lot of opportunity here to, number one, provide more access to more individuals, and number two, to provide more profit for everybody.
Yeah, more opportunities, absolutely. So what really is the difference between what you are doing and crowdfunding, for example?
Yeah, so crowdfunding is fantastic. It provides individuals with a lot of real estate opportunities. But in my mind, it's just the beginning. Then you need to start selling, right? So people need to buy and sell. So we do crowdfunding. Crowdfunding is just a type of investors, right? That you involve, retail investors. That's crowdfunding. So a few projects we're running right now, for example, like the London Digital Bond, which is a fund, or rather a company that buys and sells single-family residential real estate in London. So that is actually placed on a Republic crowdfunding site where individuals can go and buy it for crowdfunding. but then they get access to the solid block platform where they can sell it whenever they want to sell.
I see. So what, your platform is like an exchange?
So we facilitate, that's a great question, Michael. So we facilitate over-the-counter trade, meaning like a bulletin board. But if you want to have access to an exchange, which we're not, because we actually are working with a variety of exchanges out there, and each of them has their own liquidity. So we list the securities we issue on a number of exchanges that can then facilitate the trading, right? So we're doing it globally.
So what do we need your platform for?
As a connection, as a connective layer, right? So usually exchanges focus on the secondary market. We are doing the primary issuance, right? So we're doing the primary issuance. All these crowdfunding platforms are basically the front end or the marketing or the distribution of the issuance. So the issuance is happening on our platform. We're using front end platforms like Republic to bring investors in. Then we use the blockchain to record the ownership. And then we'll list the securities on different exchanges, right? So we're the connecting layer between all of these players.
I see. Do you have any use cases? I think you mentioned something about in London, but something more understandable?
Yeah, so the St. Regis is the best one because it's currently trading, actually. So we issued the St. Regis Aspen coin.
What is it, a hotel?
Yeah, it's a ski resort. It's the most famous ski resort. If you go skiing, which I know you skateboard, but I don't know if you also snowboard. So you can go snowboarding there, and basically, we issued it at $1 per share. Now it's selling at $1.30 per security, and on top of that, it's giving dividends, right? Dividends of 4 to 6%. 4 to 6.
What, to the holders of the tokens?
Yeah, they get dividends.
Wow.
So yeah, so if you bought it in 2018, let's say if you invested $10,000 in 2018 and you wanted to sell it a year and a half later, you would have gotten $13,000 on top of some dividends, right? So you really would have, together with dividends, you would get close to 20% annual interest or upside on your asset, which is incredible for a AAA property like the Aspen coin, right? Like the St. Regis Aspen ski resort. Now it's now trading, like I said, on T0, which is an exchange. It's an American ATS, automated trading system, and so that's one of the most successful projects out there in the industry.
Excellent. Well, hopefully many more to come. And a few more little questions. What do investors need to know, and what are the benefits before getting involved in digital securities?
So for investors, the biggest benefit is diversifying your portfolio, right? And the ease of investment, the ease of buying, and the possibility of selling. So, and just also introducing yourself to a new asset class, just like, a few years ago when people wanted to invest in Bitcoin, they just put a little bit of money, learn about which exchanges you go on and so on. Yeah.
I see. Okay. And how about the actual real estate owners? What do they need to know in terms of the benefits before using this methodology to raise funds?
So they need to see if that's right for them, really, because if they're looking in the long term, right, they're doing a lot of projects, and those are the majority of the clients that we have. They're doing a lot of projects, and they need to streamline their activity. They're investing in the long term, in the long term kind of machine, which raises funds. They leverage some assets that they build, and then they're building the others with the funding that they get. So if this is the right model for them, then we would welcome them to onboard with us, right? It's usually not a one-off. It's usually not a one-off project, and it's usually not, let's say, a small project like a single family. It's usually large projects with large developers at the moment, right? In the future, it will change as this industry develops.
I see. And an interesting question, since you're an expert in the industry. So how do you see the economy in 10 years from now?
It's going to be very much decentralized, right? So we're going into a new space, like I said, where you're your own bank. And just like people in the beginning of the century, some people couldn't read or write, right? And now we have a much higher level of literacy. I think in 10 years from now, people are going to be super, much more financially literate, that's for sure. But also they'll know how to store things on their wallet. They'll know about cryptographic keys and things like that, right? So I see the finance a lot more decentralized, and financial resources a lot more diversified, right? So people making money in new ways that you cannot think about today.
Yes, thank God for that. And what about the corona? What do you think about the corona, and is there a relation of any sort to the blockchain crypto revolution, which is happening right under our noses, regardless of the fact that so many people are unaware of it?
So corona is, a biggest catalyst of digital transformation. It's fantastic for some real estate. It's horrible, devastating for others. It wiped a lot of people's incomes, but it also, I guess, taught people to diversify and not put all their eggs in one basket. And it's a fantastic catalyst for technologies like ours, actually.
In what way?
In a way that people are more willing to buy things online, to buy real estate in other countries, for example.
I see. Wow. Okay. Every bad thing has a good thing in it. Seems to me like we've covered all the subjects. Is there anything else you would like to add?
No, I welcome everybody to go and visit our website, solidblock.co. And, check out our blog as well. I have a lot of information there. I have a course which teaches about real estate tokenization, like step by step, for both real estate developers and investors. And thank you, Michael, for having me. It's been a pleasure.
Amazing. I mean, I thoroughly enjoyed this conversation. The information imparted was absolutely amazing, cutting edge, futuristic. And I would like to thank you, Yael Tamar, for your time and for this amazing interview. Thank you.
Thank you. Have a great day.
Amazing. And to you, our lovely viewers, please don't forget to subscribe to the channel, give us a like, share us on all the social platforms. Have a lovely day. Thank you very much, and goodbye.
Bye.